A day of drama and turnaround. Markets wrestle with AI, earnings, and Bitcoin. On Thursday, February 5, 2026, global markets danced between deep selling pressure and hopeful rebounds, as investors navigated a barrage of corporate earnings, weak economic signals, and fresh anxieties around artificial intelligence, AI, spending plans. The result: a complex day that ended with major benchmarks sharply lower but set the stage for a stunning rebound the very next session. Tech pain and macro signals shake confidence. Wall Street's sell-off gathered steam early in the session, led by declines in the technology sector, historically the market's growth engine. The S&P 500 fell about 1.2%, the Nasdaq composite dropped nearly 1.6%, and the Dow Jones Industrial Average slid over 500 points as traders reacted to a mix of weakening labor data and stretched tech valuations. Several key factors weighed on sentiment. AI spending fears. Alphabet's announcement of a planned $185 billion capital expenditure on AI in 2026 triggered concerns about profitability, sparking volatility in big tech names. Labor market softness. U.S. weekly jobless claims rose more than expected, while job openings dropped to a multi-year low, prompting speculation about slowing economic momentum. Bitcoin slide. Cryptocurrencies, often viewed as risk assets, tumbled sharply, with Bitcoin hitting its lowest levels in over a year, underscoring broader risk aversion. Tech rival Meta and select stocks like SiriusXM bucked the broader trend with modest gains, but the mood was still cautious. Global ripples. Asia and Australia feel the heat. The weakness in U.S. markets wasn't contained at home, it rippled across the globe. Asia's Hang Seng Index dipped more than 1%, reflecting risk-off sentiment among equity traders. Yet Japan's Nikkei bucked the trend with modest gains, suggesting pockets of resilience. Australia's ASX endured a harsh session with a 2% plus decline, marking one of the market's roughest sell-offs in months, driven by falling tech and commodity prices. Across both regions, investors seemed cautious about future earnings growth and the potential impact of high corporate expenditures, particularly in AI, on profitability. From pain to triumph, Friday's rebound lights up Wall Street. But what doesn't break sometimes rebounds with force. On Friday, February 6, 2026, U.S. markets executed one of their strongest rallies in months. The Dow Jones Industrial Average surged past 50,000 for the first time, a historic milestone. The S&P 500 and Nasdaq climbed sharply, with broad gains across technology, healthcare, and financials. Underlying optimism about long-term growth in AI, chipmakers like Nvidia and Broadcom, and strong consumer and travel stocks helped bolster confidence. Despite Amazon's shares retreating on concerns tied to heavy capital spending, the wider market mounted a convincing recovery that suggested traders were looking past short-term churn toward stronger fundamentals. What investors are watching next? As markets settle after a turbulent week of selling and bounce-backs, several themes are now in focus. AI spending versus profits. Big tech's bold capital expenditure, whether Alphabet's mammoth AI plans or Amazon's aggressive roadmap, has put a spotlight on long-term growth trade-offs versus near-term cash flow realities. How investors balance these tensions will influence tech valuations moving forward. Economic data flow. With weak labor figures signaling a potential slowdown, traders will closely monitor upcoming jobs reports, inflation reads, and any signs of Federal Reserve policy shifts. Bitcoin and risk appetite. Cryptocurrencies continue to oscillate violently, making them bellwethers of broader investor risk tolerance. A sustained rebound here would support risk assets across equities. Bottom line. The stock market's reaction on February 5, 2026 highlighted how narratives around AI, macroeconomic data, earnings, and cryptocurrencies can dramatically influence both selling pressure and sharp rebounds. From steep tech losses to a record-breaking rally, this period reflects an investment landscape where short-term volatility and long-term opportunity lie side by side. Investors now face the challenge and opportunity of discerning when pessimism ends and a fresh cycle of growth begins.